My name is Annette Sinowick. As an analyst for the Kwanzaa Mutual Funds, I'd like to provide an introduction of the PotashCorp in general and some background, followed by a discussion of the financial analysis for the PotashCorp annual statement of 2009. I'll end with a discussion and comments on whether I approve or disapprove of the BHP takeover. The PotashCorp, also known as the PotashCorp of Saskatchewan, is one of the world's largest potash producer and fertilizer companies. It also has claims to fame as being one of the largest producers of nitrogen and phosphate. Key operations and business of the PotashCorp exist throughout countries and continents throughout the world, including China, India, Brazil, Southeast Asia, and North America. Late summer of 2010, the world's largest mining company, BHP Billiton, laid on the table a stock purchase price of $130 to shareholders. This offered price was close to 15% over and above the current market price being offered on the TSX. This offer of interest from BHP Billiton immediately caused the Toronto and New York Stock Exchange trading prices for PotashCorp stock to both increase by over $25 per share. This hostile bid valued the PotashCorp at approximately $38.6 billion. Potash senior executives declined the offer and responded publicly by stating the offer to shareholders in an effort to take over the main ownership of the company heavily undervalued the worth of PotashCorp, and its performance warranted a higher valuation. Some press also reported that the PotashCorp was considering alternative buyers and had been in contact with other large fertilizer corporations such as Sinochem and Vale. The 2007 to 2009 PotashCorp financial statements illustrate both performance strengths and weaknesses for the company. A review of the consolidated balance sheet reveals significant shifts in both assets and liabilities. Overall, the asset structure of the PotashCorp has remained relatively stable throughout 2007 to 2009, although a slight increase in the percent of current assets compared to total assets was realized in the 2008 fiscal year. Total current assets were worth $1.8 billion and accounted for 18.64% of total assets in 2007. In 2008, the total current assets were valued at $2.26 billion, or 22% of total assets. In 2009, the total current assets remained relatively unchanged at $2.2 billion, but dropped to a meager 17.58% of total assets. The percent of inventories to total assets has remained relatively unchanged with the exception of a slight increase in 2008. The 2007 inventories accounted for 4.4% of the total assets, or $428 million. The following year, the percentage of inventories increased to 6.98%, or $714 million of total assets. The percent of inventories then stabilized again in 2009 to 4.83%, or $623 million. The measure of working capital is calculated by subtracting the total current liabilities from the total current assets. This is important to review as it provides a measure of the PotashCorp's operational efficiency and ability to pay back any credits or loans in the short term. For 2007 and 2009 fiscal years, the PotashCorp was operating with secure working capital funds of $809 million and $711 million respectively. The 2008 fiscal year, however, realized a negative working capital due to the higher percentage of short-term debt and current portion of long-term debt of 12.9% and payables and accrued charges of 11.5%, equal to $1.3 billion and $1.1 billion respectively. Now, some review of the consolidated income statement. Net sales almost doubled from $5.2 billion in 2007 to $9.4 billion in 2008. The 2009 year saw a steep decline in net sales to only $3.9 billion, lower than that of 2007. The main influence in high revenues for 2008 was due to the increase in cost of goods, or COGS, which accounted for 41.2%, or $4.9 billion. The percentage of COGS, however, was higher in 2007 and 2009 at 55% or $2.8 billion, and 66%, or $2.6 billion, respectively. Operating income saw some fluctuations from 2007 to 2008 and again from 2008 to 2009. The 2007 operating income accounted for 30% of net sales. This jumped to 49% of net sales in 2008. The percentage of operating income then decreased to 29% of net sales in 2009, very close to the operating income percent of net sales and dollar value in 2007. The PotashCorp was not insulated from the economic crisis of 2009. A meager amount of $923 million in cash flow from operations was reported in 2009. This was less than one-third of the $3 billion reported the prior year, 2008. The impact on net income was mirrored, with $987 million being reported in 2009, paling in comparison to the 2008 reported figure of $3.4 billion. The most significant influence on the company's financing activities came from the proceeds from long-term debt in the amount of $4.1 billion and from the repayment and finance costs of long-term debt obligation in the amount of $3.5 billion. These movements resulted in total cash used in financing activities of $8.53 million. It is important to note that no financing activity funds were spent on the repurchase of common shares in either 2007 or 2009, dramatically different than the over $3.3 billion spent in 2008. While the global recession severely has impacted the fertilizer demand, the science of food production has not changed. Just as executives for the PotashCorp have adequately quoted, the failure to feed fields is a trend that can't last for long. The significant volumes of potash and phosphate that have been mined for crop production must be replaced to sustain the productivity of the soil. As an analyst for Kwanzaa Mutual Funds, I disapprove of the BHP share offer price of $130. The current demand and forecasted continued reliance upon fertilizers to replace soil nutrients secures the potash core in global fertilizer markets. The PotashCorp, directly or indirectly through significant influence, accounts for more than 22% of the world's potash production and has the ability to regulate prices through output adjustments. The offer, however, although higher than fair market value, does not adequately consider its ongoing acquisitions and investments with other key market players such as China, Chile, and Jordan. I do recommend, however, a sell-off for stocks currently in our portfolio, as we cannot gamble that the current inflated stock prices will increase that much higher. Potential risks that may cause the share price to fall include the failure of a competing bid to be presented by other major players and also the potential for BHP not to further increase their market bid, which may cause share prices to drop once the hostile interest in PotashCorp is removed. Thank you.